Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you in this episode is how a butterfly trade makes you money. So stay tuned. I'm going to share with you some insight on this, how it's constructed, and really the whole point behind doing butterflies is to make consistent income from the theta decay, time decay, or moving and a directional trade. So I'm going to show you how it really works so that way you can see the point behind making money from butterfly trades. All right, so if you're brand new to the channel or you haven't been here for a little while, we're doing this episode really because we're just launching a new course all focused on butterfly trades. So you can go to our website at tradersfly.com. And once you're on tradersfly.com, you can go ahead and scroll down and you can see kind of the butterfly spread course there that you can go ahead and get notified or even purchase depending on when this video is released. Now, this course is detailed. We're going to release it in blocks, in stages. So part one will be released kind of the first week, and that'll be kind of the foundation of butterflies. And then we're going to get into kind of the Greeks and setting the butterfly spreads up. Then we'll get into planning out the trades, adjusting the trades, and then getting into strategy ideas over the next couple of weeks, such as speculative butterflies, broken wing butterflies, long investment butterflies, double butterflies, and many more. So there's a lot of beautiful butterflies out there. Anyways, the way that butterflies really work and kind of the power behind it, I'll show you here with a quick Amazon trade, actually, that I kind of have on, is really when you, let's go ahead and go with Fiverr. It's a little bit of a cheaper kind of stock price. So here, when we go ahead and look at this stock, the way that it's broken down is a butterfly trade, really you're selling a ton at the money. Okay, you're selling a ton at the money or close to the money. Now in this case, I went a little out of the money, so it's a little bit more of a directional butterfly, but because you're doing something right at the money, right? A business makes money from selling a product. Apple sells phones. BP sells gasoline, Boeing sells planes. Everybody is selling something. So that's how they make money. So when you sell something, that's where you're making your money or income. And then what you do is you kind of protect one side, then you protect the other, and that's how it kind of works. So let's set this up from the ground up or from the beginning, so that way you get an idea. So let's say we go ahead and put one on BYND. So this is just a ticker that kind of noticed here. So what you're doing with a butterfly spread is, let's say I want to go ahead and sell the time premium here at this 132. Why would I do that? Well, this loses the most time premium. If I go in and I go to the thetas, look, the ones that are closest to at the money lose the most. Whereas if you go out of the money, they don't lose as much. So you want to sell the most at the money. That's the way the butterfly spread works. Now, I'm not saying you always want to sell at the money. I'm saying in a butterfly spread, it's nice when you sell at the money because you lose the most time premium, meaning the buyer loses the most time premium. In your case, you make that. So if we go to kind of this 132 or let's say the 133, I will go ahead and sell a single, and I will do two of these. So let me just actually construct it this way. So 1 and 2, okay? And I will do one put and one call. So there we go. So here I have a basic trade setup. I've sold two spreads. Now, here's the problem with this. One big issue is I've got pretty much risk all the way down to zero. So unlimited risk on the downside if it goes down, unlimited risk on the upside. But what's the cool part behind it? Well, my theta decay here, which basically means the amount of premium I make every day for just kind of holding on to this trade, is 35. So here's how this profit picture works. This is the stock price. So if it moves to 90 or it stays at 130, because current stock price is 132. So if it wiggles around and it goes up to 170, what is it going to be? And then my line right here, this is my zero line. This is my profit or my loss. So I've got, let's go to profit here. Or my big problem down here is my loss. So as this wiggles, let's say it goes to 150, I just match it up based on kind of the white line, where is it at the time, and go over here, and that's either a profit or loss. Now here's the beauty behind it. The white line is today, green line is at expiration. Take a look at what happens when I move this hypothetical time frame forward. So that white line keeps growing, and you can see my profit and loss right here also starts growing by the number of theta. So I get $36 added to the current profit and loss. So again, a few days into it, you can see you capture a lot of time premium, and then you can get out. You can get out of it early. Now, the issue with this is basically when you look at this trade, let me just show you, and I will sell a strangle here. Okay, so you can see a strangle is very, very similar. And then if you look at a straddle, okay, straddles and strangles here, is the same strike. So here we go. Here's the straddle. That is the exact thing that we have right there. So straddle, strangle is just starting to get things split. So you could say, hey, one is 38, 32, and so on. So what you can do there is actually, I could go ahead and take this and actually start widening it and flattening up the top. Now I'll show you that in a second. But let's deal with the issue that we have. This is the baseline. We're making a boatload of money from the theta, or the time premium. Why? Because when you buy car insurance, the company that sells you the car insurance just pockets your money time and time again. And that's what we're doing. We're selling insurance here. So when you send your $200 check every month or a $500 check every month to your car insurance company, what do they do with it? They pocket it. Money comes out of your wallet, goes into their wallet. So that's the same thing here. You sell one of the calls and you sell one of the puts, and you're making money. The problem is if somebody gets in an accident or you get a stock problem here, you're in trouble. So what do? Well, I'll go further out, let's say at the 125 on the put side, and I'll buy a single, and there we go. I've got some protection now. And then I will do the same thing over here at, let's say, the 140, and I'll buy a single here, and I'll get some protection. And now what do I have? I've got this butterfly trade set up. Now, it's not perfect right now. It's starting me negative just because the way I've set up the spread. But I've got this butterfly spread that's set up right now. And let's see if I can make it a little more balanced here. Maybe not perfect. Just because of the 133s. I might have to juggle this a little bit like that. And there you go. And you're going to still have a theta. Now, you won't have as big of a theta, but you have a positive theta. And that's the power behind butterflies, is that you get the fastest theta. So let me go ahead and buy it as a single butterfly spread, which will actually make the trade better, because then what you're doing is, actually, let's start with an iron condor. Sell an iron condor. And that way you can see it exactly like this. So I'll take the 133s, I'll sell that, and I'll sell the 133s, okay? And then I'll buy the 140s, and I'll buy the 126s. And now, there we go. I've got kind of a single trade butterfly there, rather than splitting it up all in the contracts. So it's the exact same trade there, without being down or starting down, because I have to pay a bid-ask spread on every single contract if I did them all separate. If I do it as one trade, it makes more sense. And now I've got a theta of 1.82. And look at how much capital I'm using. I'm only using $118. So if you multiply this times, let's say, 20 contracts, yeah, you're using about $2,360 of capital, but you got a theta of 36. So now every day you're making about 36 bucks from those short positions, and you're still protected. Okay, you're still protected. And with time, that theta grows. So look, I want you to watch this. The theta starts at 36, but over time, that 36 goes to 130. So you're making 135 a day. So that continues to ramp up. And look at this position. That white line keeps getting closer. So it just keeps growing and growing. Now, yes, the stock price isn't going to stand still. So you might be over here, and that's fine. You know, you're still capturing quite a big premium. So, or it might be way up here, and that's fine too. It's not going to be perfect. Life's not perfect, but that's the way that it works. So anyways, the point being is you're capturing this time value because the most time premium is right at the money, and that's the ones you're selling. You're selling the ones right at the money. So if you look at this trade, the ones I'm selling are right here, the 20 of these, and selling 20 of these, and that is kind of right at the current stock price, which is, 133. And that's what we're selling, about the 132, 133 level. And it can be really, really powerful for these non-directional trades. Now, let's say you want to go directional, just as a little bonus. You could go ahead and lift one of these legs. So I could bring in a leg. Maybe this one won't work. There you go, that way. And I can be a little more bullish, or you could flip it to the other way and be a little more bearish. But you can see you can do these based on your own personal taste. So anyways, that's what I want to share with you, is how these kind of make you money and really the power behind it. Kind of the basic construction to it. And this really, we cover this in much more detail in our Options Mastery Butterfly Spreads course. So take a look at that on our website at tradersfly.com. Scroll down, you'll see that course right there. You can purchase it. And we've got a lot of great modules for you. The course is very detailed, and we'll just continue to add a few more modules there. So take a look at it. There's a lot of great stuff there. Check it out. Hope you get it so that way you can learn more about butterfly spreads and really see a lot of these strategies in action. So that's also one of the huge benefits to it. So thank you so much for joining me. Hope you enjoyed this video and some insight. Feel free to grab some other freebies that we have if you're brand new to the channel, or subscribe to the YouTube channel if you want to see other great videos. Thanks again, and I will see you in the next video.